Hi, and welcome to this morning's early global view. It's currently 8 a.m. on Wednesday, April 20th, 2016. Coming to you a bit later than usual because we wanted to let the pre-opening activity fully play out. They'd been lower early and then higher on the S&P, currently just up a few bucks at 2097 or so. And this is kind of important because we're looking at a market that finally made a more definitive push above the 2085, top of the 2075-85 range on Tuesday. So we're going to get back to the reasons behind that. But remember, all of this strength in the U.S. equities, leading the others up, is in the wake of still weak OECD composite leading indicators early last week. Also early last week, a downgrade to the World Economic Outlook from the IMF, and what has generally been weak data since then. We'll get into more of that shortly, but most importantly, it's the central bank's continued extensive accommodation that means bad news is good news. And we'll be headed into more of that during what is typically a strongish April, into the ECB tomorrow morning on Thursday. So we have to ask, what does all this mean to the markets? As we mentioned previous, the S&P 500 is up a couple, up at 2097 today. That's right within striking distance of the 2098 high. Just to be very brief about it, because we've been over a lot of this before, the higher resistance is up into 2103 to 10. We'll see a bit more of that on the intermediate term charts, as that is the congestion from the later part of last year that the market left before it gapped down in January. So this market's very near some key highs and higher on the year again, of course, and the lower support now is going to be back at 2085 to 75. What's interesting about that is if this market should weaken off for any reason later today, it would do two things. One, it would tend to take it off from above the hourly upper oscillator band, the runaway band on the hourly oscillator, and that would probably tend to lead to more weakness. But two, as we go out into the later part of today and even early tomorrow, the current more aggressive push up since the last reaction low going back to last week Tuesday in the morning that was down again near the 20 into the 2035 to 2032 range before pushing up finally more definitively above 2060 on last Wednesday's gap higher opening that has fed the rest of the rally. Well, that channel late today and early tomorrow is up around the lower end of the 2075 to 85 area. So in other words, even allowing some slippage through the channel, unless this market is back below 2075, back in that lower range again, it would also put it on a failure of the weekly up break at 2078 we're going to look at shortly. And that pretty much does it for the short-term view of the S&P 500.